I have Lou Sagatov. I'm back here in the Century 21 office talking with Tom.Elwood about interest rates. So, Tom, what's your take on where we are today and how does it affect home sales?
So interest rates have been climbing, and this year they've gone from about 3.5% to close to 7%. And the impact of the interest rate on people's housing payment is substantial. So a lot of people have lost a lot of purchasing power at this same housing payment. And where people before may have qualified for a $700,000 home, now their limit's probably about $500,000. And that does have a very strong impact in the market.
Okay. Um, so the question then becomes what's going on with the market? And I can only speak for Arlington primarily, and a little bit for about Fairfax County because that's where I focus my business at. So what we're seeing in both these jurisdictions is we're seeing low inventory or inventory is dropping, and part of that is driven by uh, I, I I believe sellers are anxious about did they miss the top of the market? And the short answer is no, they haven't missed the top of the market. What we're seeing in Arlington, we've seen about a 3.3 to 3.5% rise in home prices within the last month compared to year to date. And it's very similar in Fairfax County. Now, the other thing to consider is that that's 3 to 3.5% on both these areas. That's after we've had this phenomenal 15 to 18 to 20%, depending on where you are in this area, of price increase of homes. So um, on the seller side, it's a good time to sell.
Are you seeing longer times when a property for sale between when it gets listed and when it goes under contract?
What I'm seeing is that from that standpoint, that's a great question. From that standpoint, I'm saying we're getting back to more of a typical market. So homes that are move-in ready. I mean, everything's done. It's just you move in, you put your furniture in, you hang your pictures up. Those homes are selling quickly, very quickly. Uh, they're selling at or above asking price, and sometimes there are no contingencies.
That sounds like a seller's market to me
It's
still.
almost like the catch 22 is if the house isn't there, if the house needs work, or if the house is dated, needs a lot of updates, then we are seeing price reductions. We're seeing longer days on the market. We're starting to see more contingencies. So the key, I think, right now is to understand, if you're a seller, to understand how your house fits into the marketplace and to price it. You have to price it correctly. On the buyer side, there's a lot of opportunities. So the opportunities are, even though your buying power may be less, your opportunities are there's less competition out in the marketplace. There are also, you have time to breathe. When you go look at a house, you don't need to make a decision. Oh, I've got to write an offer, a blind offer, and like playing Powerball. Am I did I hit the number or not? By the way, I didn't hit the number. That's why I'm here today. Did you?
No, try it
So,
again though.
yeah, no, I think I got one right. I got $4 back. But anyway, so it's become a little bit more. It's easier, I think, on the buyer side to really find properties. The key, I think, on the buyer side is to be really clear on what you're looking for, and it's always been the case. But now we're not in a feeding frenzy. So I think it's, with interest rates, there's that point. I guess the other question is if people are able to put more money down, how is that going to affect the buying power? Or what's your take on that?
So adding additional down payment doesn't always improve the interest rate. Obviously, getting to 20% down will eliminate mortgage insurance, and that certainly can be worth
Right.
it. But it's not always, and that's a thing you've got to balance. And then, generally speaking, interest rates is a measure of risk. So a person with very good credit putting more money down after a certain point is not going to have any impact anymore. And when I say good, really good credit, I mean 740 and up.
Okay. But but it will impact their monthly payment.
Absolutely. That's a very strong relationship.
So that's the relationship. Okay, so the next question is, do we buy down points?
That is a guess you're making. Well, if the points make sense to buy. So for instance, I recently did a transaction where a 0.5 point in payment dropped the interest rate by almost 0.5%. So that person was saying that if I pay this interest up front and I don't refinance in a year, I've recouped my money. I would take that gamble all day long. Now, if interest rates go up, they're in great shape. If interest rates drop, they refinance. So either way, they're protected.
Okay, so what I'm hearing,
Excuse me.
bless you. What I'm hearing you say is that you really need to sit down and talk to somebody and really get a look at not just the interest rate, but you have to look at the whole gamut, and you have to have a discussion about where things are going and what the impact of your money is going to do.
Yes.
Yeah.
Mortgages are all about trade-offs. And if you know those trade-offs, you can pick the ones that you pick the direction you want to go and which ones you can accept and which ones you want to reject.
That's fantastic. So that's one of the reasons why my office, and I'm not smart enough to do all this, but the guys that own the Century 21 Redwood office have a relationship with Day One Mortgage, because this is the kind of conversations that we have with our clients that really make an impact on people's ability to make decisions what's right for them. So what's going to be our next topic? It's a drummer. We've got a cheat sheet here. We've got a cheat sheet here. So
Well, let's talk about the pluses and minuses of buying now versus sitting and waiting.
that's a great thing. So if you have any questions or comments, please leave them in the comments below. Please subscribe to our channel. Again, we're going to leave our contact information at the end of this video. Feel free to reach out and chat with us, and we'll see you on the flip side.
Take care.